Hello, students. How are you? Yes, I'm back again, your teacher, your accounting teacher, Haris Bhatt, and you are seeing my YouTube channel, Learn Accounting with Sir Haris. I hope so that you are fine and in good health. Today, as your expectation, obviously, I have come with the solution of paper three. And paper three means that we are going to solve accounting 9706. We are going to solve accounting 9706, October, November 2024, and variant 32. I have variant 31 also, variant 33 also with me, but I'm not going to solve it right now because it doesn't come in our region, I must say, our region. It doesn't come actually. So that's why region 4, I mean to say. So let's do it. You know that in paper three, we have three questions as I have given in my guess. The number one is of manufacturing account rather than cash flow. Then number two question was ratios. And then number three question of partnership changes, that is profit and loss sharing arrangements, which I have given in my guess, May, June, in which I have asked you to solve the question of May, June 1141 and October, November 1143. So that was an important May, June 1143 and October, November 1141, right? So that question, almost same type of question has come regarding partnership changes or profit and loss sharing arrangements. So let's start doing the first question, which is manufacturing account. And inshallah ta'ala, I hope that my lecture will be helpful for you. And do remember me in your prayers. Do comment, give me comment in the comment section. Follow me on my YouTube channel, Instagram and Facebook, and subscribe my YouTube channel. And inshallah ta'ala, I continue to making such kind of videos, informative videos for you in the future also. And inshallah ta'ala, that will be free of cost, right? So my target is to achieve that kind of a standard in which the education, which is going to be a noble profession, and I'll keep it in mind. I kept myself in mind that as per my instructions of my late father, I will continue to help the students without any interest. So let's do the question. Paper 3, October, November 2024, variant 32. Let's go for the first question, which is going to be obviously the manufacturing count. So if we just see, let's discuss it. The source A for question 1 is given. So H Public Limited Company manufactures one product, which it sells to the public via its website and by mail order. It accounts for factory profit so that the transfer price from the factory is equivalent to the buy-in price which the business would otherwise have had to pay. So this is the same thing which we have discussed, which we have already have an idea about that what is factory profit. Factory profit is the amount of profit which we use to add in cost of production to find the transfer value of goods produced, to find the market value of goods produced, which is basically the price, which the same price by which we can purchase those goods from an outside supplier. If the same goods are supposed to be purchased from an outside supplier, we have to pay that price. So that is going to be the transfer price. So for factory profits, so that the transfer price from the factory is equivalent to the buy-in price, which the business would otherwise have had to pay if the goods are purchased from an outside supplier. A summarized trial balance is given. Premises 6 lakh, factory machinery, non-current asset, office equipment, delivery van, and the depreciation regarding all these assets regarding factory machinery is given 43,000, office equipment 26,500, delivery van 15,200. Inventory, raw material, and finished goods are given. It means that there is no work in progress opening, and obviously there is no work in progress closing. I will solve the question numerically along with you because I haven't solved it earlier. Neither I have the mark scheme nor I have the solution. So let's do it. Raw material is 23,000. Finished goods is 28,080. The paper was on 24th October, and I'm going to solve it on 3rd of November. So finished goods are 28,080. One thing which I used to ask my students all the time, and I again want you to remember that, which is very important. If the question is of factory profit, and if the examiner has already informed you that the goods are used to be transferred on transfer price from the manufacturing to the trading account, so it is understood Remember, it is understood that the finished goods closing inventory is on transfer price. So it means that even it is not written that either the inventory on 1st October is at cost or it is at transfer price or market price. It means that finished goods inventory is on transfer price because the question involved factory profit. So it is we presume this, that the finished goods inventory at transfer price because it has been transferred from the last year to this year along with the factory profit. So factory profit is included in this. Trade receivable, trade payables are given, bank overdraft, bank positive is given, ordinary share capital 4,20,000, revaluation reserve 1,90,000. It means that this is a question of company accounts and it includes company manufacturing accounts, right? So manufacturing account is the main topic, but it is regarding the company in which we are preparing the manufacturing account. Sir, this has never come in the paper. No, it has come in the paper in the past. In October, November 19, we have a question of manufacturing accounts which related to the company, right? If you will ask me, I'll send you the solution of that question and the question also because it is available on my YouTube channel also, already there. So finished goods, 8% debenture is given, 2 lakh into 8%, that is 16,000 is going to be the finance cost. Provision for unrealized profit, 1st October is given 4080. So that is one of the most important part. Provision for unrealized profit on 1st October. It means that is the profit included in finished goods opening because the finished goods opening is given on transfer price. So the profit in finished goods opening or the factory profit, which is included in finished goods opening, is 4080 because that 28080 is on transfer price. There's 28080 is on market price. So let's calculate it. So 28080 is on transfer price and the factory profit, which is included in this, that is 4080 minus 4080. Obviously, we will be able to find the finished goods at cost. It is on transfer price, but now after subtracting the factory profit, now it is on finished goods inventory at cost, which is 24,000. So now let's calculate the factory profit percentage on finished goods opening, or you may say factory profit percentage for the last year. So let's do it. 4080 is the factory profit divided by cost, finished goods inventory at cost 24,000 multiplied by 100. Your answer is going to be 17%. So we have calculated that the finished goods opening, for the finished goods opening or for the last year, the factory profit percentage was 17%. Let's move forward. Retained earnings 82870, revenue, purchases, carriage inward, factory labor is given, and factory overheads, admin expenses and distribution costs. Finance cost is given 8,000 rather than 16,000. We'll discuss it on the later part of the question. Now let's see the other part of the question. Here it is. Let me make it a little bit clear for you. The rate of factory profit for the year ended 30th September 2024 was 19%. Oh my God. Please try to understand the point, my dear. We are solving the question which starts from October, 1st October 2023 and ends on 30th September 2024. So the factory profit for the current year is 19%, but the factory profit of the last year for the last year was 17%. We have calculated that because that is the last year factory profit, and the current year, this year, the factory profit is 19%, which should be calculated on the finished goods inventory, finished goods closing inventory. So that should be calculated on finished goods closing inventory. So let's move forward. So the opening is 17%, closing is 19%. You must have an idea about that. Let me discuss. Sir, why you are saying this? How can you know that this is opening or this is closing? So let's do it. This is inventory at 1st October 2023, right? And our summarized trial balance ends at 30th September 2024. So the inventory at 30th September 2024, that relates to the finished goods closing, obviously. And 1st October 2023, that relates to the finished goods opening. So the factory profit, which is included in the finished goods opening, is 4080. So the factory profit percentage for the opening finished goods is 17%. And for the closing finished goods, it is given. So we don't need to calculate it actually because it is already given. And it is given that is going to be 19%. Okay. Now let's start the question again. Inventory at 30th September at cost. See, they have bold it. It is in the bold letters at cost. So that student should have an idea that raw material and finished goods have been given at cost. So it means that finished goods 15,000, that is the closing finished goods inventory, but this is given at cost. It means that does not include, I repeat, that does not include factory profit yet, because it is at cost. When we include factory profit in it, then it will be converted into finished goods. We will add factory profit into it. Then it will be the finished goods closing at transfer price. Let's do it. 15,000 is the finished goods closing at cost, and 19% is the factory profit percentage on the finished goods closing. So let's calculate it. 15,000 into 0.19, that is 2850. 2850. So I'm going to add it, 15,000 plus 2850, which is the profit, factory finished goods inventory at cost, plus the factory profit on that finished goods inventory at the rate of 19%. So 17,850 is the finished goods closing inventory at transfer price. So the finished goods closing at transfer price is going to be 17,850. Premises were revalued during the year. There were no disposal of non-current asset during the year. 1,90,000 was the revaluation reserve, which has been there in the previous page. And the premises value was 6 lakh. So 6 lakh plus 1,90,000 becomes 7,90,000. But we are not going to dealt that revaluation because that is not a part of the question. Depreciation was still to be provided. The depreciation charge for the year is given. So we no need to calculate the depreciation. Factory machinery, office equipment, and delivery van. Factory machinery is the factory. It will go to the factory overheads. Office equipment is basically will lead towards admin expenses, and depreciation on delivery van is a part of distribution cost according to the Companies Act, right? According to the format given in IS1 regarding the company. The debenture were issued in 2020. That is the very important point, my dear. We are solving the question for 30 September 2024, and debentures were issued in 2020. It means that we have already been paying the finance cost, the interest cost on these debentures in the previous years. So we will pay the finance cost, or we will record the finance cost of the current year also in the same way as we were doing in the past years. Why? Because the debentures were supposed to be paid back in 2030, right? But if you just look at the question, I will wanted to show you that in the question, the debentures were supposed to be paid in 2030, 8% debenture, 2 lakh into 8%, the finance cost will be 16,000. You will not record the finance cost only 8,000 because 8,000 finance cost has been paid in the current year. That's fine. But we used to follow the accrual concept. And my dear students, accrual concept says that expenses are recorded in the period to which it relates, either it is paid or not. No doubt that the 16,000, the whole finance cost of 16,000 has not yet been paid, but only 8,000 has been paid. So the remaining 8,000 is going to also be shown as a current liability, but in the statement of profit and loss, you are supposed to record the expense for the whole year because the debentures have been utilized, the loan have been utilized by the company for the whole year. So 2 lakh into 8%, 16,000 is going to be the finance cost. Either it is paid or not. Now the requirement, let's talk about the requirement. The requirement was that you are supposed to prepare the manufacturing account and the statement of profit and loss, A and B part. So let's start doing that first, and then I will talk about the other parts also. But first, let me prepare the manufacturing account. I have just gone for the little bit portion of the question so that it won't create any problem with you. You can find it easily, understand it easily. We'll start with the raw material opening, and then we used to write add purchase of raw material. Yes, I will write right now. Then there will be add carriage inward. We used to write, and then purchase return will be subtracted if given, and then we have to subtract less. We are going to subtract the closing inventory, right? Let's see that what is the amount of raw material opening. Here it is given. Raw material opening is 23,000. Okay, let's write it down. And raw material purchases, let me find it first where it is given. inventory, trade receivable, evaluation reserve, carriage inward. Here are purchases 141,000. So 23,000, I will write it down over here as opening raw material, and 141,000 is going to be the purchases. Add carriage inward is given in the question, obviously. Here it is carriage inward. That is going to be, what is the amount? That is 4,900, if I'm not wrong. That is 4,900. So let me write it over here, carriage inward. If nothing is mentioned regarding the carriage inward, we believe that is the carriage inward has been paid on raw material. So that is carriage on raw material. It is understood. Okay, let's move forward. Let's the closing inventory. Let's see that what is the amount of closing inventory, raw material closing. If what amount is given in the question, it is given 21,000. As it is already on cost, so we are supposed to write it also at cost, 21,000. Now let's calculate it. You can calculate it with me also, right? Any error committed by me is supposed to be handled, is supposed to be, excuse me for that. So that is going to be the material used or material put in process as discussed previously in raw material in manufacturing count. So let's calculate it. 23,000 plus 141,000 plus 4,900 minus 21,000. So that becomes 147,900. So material use is going to be 147,900, right? Now I have to add direct wages or direct labor in it. Direct wages, direct labor, manufacturing wages, factory wages, production wages are the same name. And then we used to add, spelling was wrong for direct, doesn't matter because we are not concerned about the spelling. And royalties, direct expenses will also be added like royalties, or you may say license fee if given, that will be also be a part of the question. So let's see that what is the amount of factory labor it is given. That is 180,900. So let's write it down. 180,900. Then we are going to add it up with the manufacturing, with material used, we will get the prime cost. So let's calculate it. 147,900 plus 180,900. 32,8800. Let me write it down for you. 32,8800. What is the name of this? That is known as prime cost, initial cost, basic cost. Because without it, nothing can be manufactured. That is the part of the question. Now I'm going to solve the factory overhead cost, which will be a part of the important part of the manufacturing count. Because in any manufacturing company, elements of manufacturing costs are three: direct material, direct labor, and factory overheads. We have raw material opening and closing for material, but for labor, it is not possible. So factory overheads, let's see, amounts given for factory overheads are, here it is given factory overheads, that is going to be how much? 167,500. So factory overheads are given as 167,500. So let me write it down over here. Factory overheads 167,500. Let me check it out. Either there are some other factory overheads which needs to be a part of the question. So there will be, I think so, there is nothing written over here. Let me see the depreciation actually, right? So depreciation are still to be provided. It means that it is not a part of factory overheads yet, but if we have to add it in the factory overhead, and the depreciation on factory machinery will go to the factory overhead, that is 23,600. So let me write it down. Depreciation on factory machinery. I would rather consider this question, this paper of paper 3, if you just ask me, I will consider it an easy paper. But still the grade threshold will remain the same. It will still be between 42 and 43, maximum 44 or minimum 42. This will be the range of the grade threshold. What was the reason behind? Because manufacturing was quite easy. Ratios was also easy, not difficult. But for the profit loss sharing arrangement, the students were not basically ready for that. So that is the main reason it has come. I have an exact idea about that, like what is going to come in the paper. So depreciation of factory machinery is going to be 23,600. Inshallah Ta'ala, I am ready to take up the challenge, inshallah, for the February March attempt also. No worries. I am ready. I will be preparing the guess again. Inshallah Ta'ala, I will show you one. So 167500 plus 23,600, that is 191,100. Now, I will add the total of factory overheads in prime cost. The prime cost is going to be 328800 plus 191,100. 519900 is going to be the total factory cost. As there is no work in progress opening, so there is no reason to add work in progress opening or less work in progress closing. So that is going to be my cost of production. My total factory cost is going to be my cost of production, and then I'm going to add factory profit in cost of production, which we used to add in the case of factory profit, because factory profit is the percentage of amount of percentage if the same goods are purchased from outside supplier, and it is basically used to know the performance of the factory manager. To evaluate the performance of the factory personals, we used to advise our accountants to prepare the manufacturing account with factory profit, along with factory profit, so that we will be able to give some performance appraisal to our staff which are working in the factory. So factory profit percentage for 2024 for the current year is 19%. So 519900, oh sorry, 519900 multiply 0.19 or 19%, that is 98781. So the factory profit is going to be 98781. Now I'm going to add it up to find the market value of goods produced. 98781 plus 519900. That is 618,681. So let me write it down. So the 618,681, that is going to be the transfer value of goods produced. We know that in case of factory profit, the income statement or the statement of profit and loss is going to be prepared on market value, on transfer price. So let's prepare the statement of profit and loss, because that is also a part of the question. It is given in the question. Examiner has asked you to prepare the statement of profit and loss, which is also known to be as the income statement, but now it is called as statement of profit and loss. So let's prepare it. We are going to use the signs, and we'll start with it from the revenue. And revenue is going to be, we need to subtract the revenue return or sales return if given. Obviously, it is not given in the question. So let's see that what is the amount of the revenue. So the revenue is given over here along with purchases. Revenue is 8,66,000. So let's write it down. I will write in the outer column 8,66,000. Now I will subtract less cost of sales, right? And in cost of sales, I need to write the opening inventory of finished goods. Let me rub it up a little. That's it. So I will write the opening inventory of finished goods. And then I will add transfer value of goods produced. I used to write the abbreviation because I have to type it all the way through. But for you, you always use the full verdict. That would be the better way to solve the question. Otherwise, they will deduct marks. Finished goods opening, we are supposed to write the finished goods opening not at cost. The cost was 24,000. We are supposed to write all cost of sales at transfer price. So the finished goods opening at transfer price is 28080. I need to write over here 28080. Add transfer value of goods produced, which we have already calculated, that is 618,681. And less closing inventory of finished goods, we will subtract, and that is going to be on transfer price, which I have already calculated, and that is 17850. Spelling was wrong of goods, no matter. because I'm typing it. That's why. So let's continue the question. Sir, where it has come, this 17,850? 15,000 was the finished goods inventory, closing inventory at cost. Finished goods closing at cost is 15,000 and the factory profit is 19%. So what I've done, 15,000 to 19%, 2850 is the factory profit on finished goods closing. I will add the factory profit in the cost of finished goods closing to get the amount of finished goods closing at transfer price. So here it is, 17,850. Now let me calculate it. I will going to calculate it. Let me rub it up also once again for you, this one. So the question has become easier for you to understand. So let's calculate it. October, November 2024, paper 3-32, variant question number 1, 28080. I have shown you plus 618,681 minus 17850. So the answer is 628911. So let me write it down. That is 628911. I will subtract it. You will get the gross profit. I am writing it GP, but you can go for the full version of gross profit. 628911, 237089 is the gross profit. So 237089 is the gross profit, but we'll do add factory profit. Why, sir? Let me clear you, no problem. Add factory profit. How come, sir? See, this transfer value of goods produced, we have written that amount at a price of 618,681, right? But the actual cost of production is 519900. It means that 98781 with the amount of 98781, the transfer value of goods produced, the market value of goods produced is higher. Is basically it has a part of profit which is included in it with an amount of 98781. Because of 98781, cost of sale will increase by 98781 and GP will decrease by 98781. And to correct it, we have to add factory profit after gross profit 98781. Okay, we are done with that. Now we are going to prepare the provision for unrealized profit account. Though we are supposed to, the question examiner hasn't asked you to prepare the account actually, but I am going to prepare it just for the understanding purpose so that you may have an exact idea that what provision for unrealized profit account does in manufacturing account. So let's prepare it. The dollar sign is always better to prepare the account rather than for calculation. Rather than going for calculation only, do prepare the account, because sometimes the examiner used to ask us to prepare the T account and it has certain marks. So how are you are going to do that at that time? You'll find it difficult. So now what happened? Credit side, I'm going to write the brought down. This brought down means profit included in finished goods opening. And carried down means on the debit side, profit included in finished goods closing. It's a liability count. So it has a credit balance brought down and carried down also. So 28080 includes a portion of profit which we need to set aside, right? So 28080, the profit has already been there, and that is that in 28080, which is the finished goods opening at transfer price, the profit included in that is given 4080. So we don't need to calculate it actually. That is 4080, but I'm going to calculate it for you just for the understanding purposes. Let's how we calculate it. Our finished good opening at transfer price is 28080, and your percentage of factory profit, which I have calculated through the profit which is given in the question 4080, and the factory profit percentage is 17%. I can calculate the factory profit directly from the finished goods opening at transfer price by multiplying it through margin. So margin is 28080 multiplied by 17 over 117. That will again come 4080. In the carried down section, 15,000 into 19%, the factory profit is 2850. So we can easily conclude that we have a difference which will come with the name profit and loss account, and there is a decrease in provision rather than increase in provision. Increase in provision will come on the credit side, and decrease in provision will come on the debit side, and the decrease in provision is 1230. So increase in provision, just like provision for doubtful debts, because it is based on the prudence concept actually, that provision for doubtful debts, increase in provision will be subtracted and decrease in provision is going to be added. So I'm going to add decrease in provision, and that is going to be 1230, and then I'm going to write it in the next column, and I will go for the total. 1230 plus 98781, and the answer is 100,011. Let me write it down. 1 1 you see 100,011. Now I'm going to add it. 237089. 2370 is the gross profit, and the factory has given you a profit of almost 1 lakh. So factory is working quite efficiently actually, because factory is able to produce the same goods which are available in the market with a price which is 1 lakh more than the amount which is available in the market, and we are producing it less at a lesser price of with a difference of 1 lakh. So 237089 plus 100,011, that is 337100. So here it comes 337100. Right now I'm going to subtract the expenses from it, and the expenses are going to be operating expenses obviously, and they are distribution expenses obviously, and admin expenses obviously, because operating expenses we used to write for companies. Let's see what amount of distribution expenses we have. That is 87,200, but we have depreciation also. We need to add depreciation of delivery van into this. 87,200 plus 12,160. I'll calculate it over here. 87,200 plus 12,160. Let me go for a total. 87,200 plus 12,160. Total is 99,360. So the distribution expenses 99,360. Okay. Now let's talk about the admin expenses. It is also given, but there is a depreciation on office equipment which needs to be added for admin expenses, and that is going to be 10,500. So let's see the amount of admin expenses first. That is 109,800. So let's write it down. 109,800 plus 10,500, which is the depreciation on office equipment. Always remember, my dear students, that office equipment is used in the office, so that will come in the office and administrative expenses. So that is why the depreciation on office equipment over here, 10,500, will be a part of admin expenses. We are not going to write it separately. We have to write it along with the admin expenses. That is 109800 plus 10,500. That is 120,300. 120,300. Okay. Now let's go for a total of this. Right? 99,360. 219,660 is going to be the total for the operating expenses. 219,660. Right? Let me write the lines. Actually, I missed it just to solve the question. So now I can do that easily over here also. Right? So, fine. Okay. So now I'm going to write it the profit over here. That is going to be the profit before interest. Yeah, before finance cost. Okay, I don't have the space actually. So 337,100. 117,440 is the 117,440 is the profit, and I have to subtract the finance cost from this profit. And as I discussed with you, that finance cost will come with the total amount, that is 16,000. How it comes? 2 lakh, that is the amount of debenture, and 6% is going to be the, 8% is going to be the percentage of finance cost or interest cost on the amount of debenture. So 2 lakh into 8% is 16,000, which I need to subtract from the profit to get the profit after finance cost or profit for the year, because there is no tax. So let me calculate. Plus 16,000, 101,440. That is the profit for the year. So I've solved the question, manufacturing count and the statement of profit and loss. I will try to calculate it just to check the figures that either they are should not be wrong. 337,100. Okay, that's 16,000. So 101,440. That is quite fine. Okay. So this is how we have done this question for manufacturing count and the statement of profit and loss. Now let's move forward and we discuss that what other parts are given for the question. So the examiner has asked you that that the factory machinery, the depreciation on factory machinery is 23,600. That is C part. 23,600 is the factory depreciation on factory machinery. So why the depreciation on factory machinery is 23,600? Right? Why it is 23,600? That is the question actually. So let me make you understand this part. Just remember these three amounts. Okay, I will write it again for you over there. Don't worry. Over there. Yeah. Okay. So depreciation on machinery current year is 23,600 for 10,500 and 12,160 for the delivery equipment. Okay, these are amounts are given in the question for the current year. Let's see. For delivery van, it is 76,000 is the cost, and the depreciation is 15,200 till the start of the year. Okay. For at the start of the financial year, our cost was 676,000 and the depreciation at the start minus 15,200. So the amount is 60,800. Now we have calculated the depreciation of 12160 on the amount of 60,800. So 12160 divided by 60,800, that is become 20%. So it means that on delivery van, we have charged diminishing balance method. So let's reducing balance method with a rate of 20%. So we have found that how we have done that. Then the depreciation on office equipment is 10,500. That is 1,05,000 already. So it clearly shows that the depreciation which on office equipment is 10% of the original cost. So office equipment is 1,05,000. If you just calculate 10% of 1,05,000, you will get 10,500. That's fine, right? So reducing balance method for delivery van, because they are technological asset, they reduce more in early year, less in later years. Office equipment 1,05,000, and straight line method we have used, right? That is 10,500. 10% was the rate. And for factory machinery, again, there has to be diminishing balance. Factory machinery is 265,000 and the depreciation is 43,000. Let's calculate it. Sorry, 265,000 minus 43,000. The answer is going to be 2,22,000. If we are going to charge a diminishing balance method with a rate of 10%, it should become the depreciation on factory machinery should be 22,200. But the current year depreciation on factory machinery is 23,600. So it means that the depreciation, maybe it is at 10%, but our current depreciation more than the actual 10% rate. It means that we have purchased some more assets, which was not given in the question yet. Maybe we have purchased more factory machinery. That is why the depreciation is 23,600. And that amount will become 14,000. So maybe we have purchased factory machinery of 14,000. And on that, the depreciation is 1,400. And that's why 22,200 plus 1,400 becomes 23,600. So we assume that we have purchased a factory machinery of 14,000. And that's why the depreciation on factory machinery is 23,600 rather than 22,200 if we are going to charge depreciation through reducing balance method at the rate of 10%, right? Next part of the question has asked you basically to find factory profit rate again if the finished goods closing inventory is basically of some different amount. So we have to find the factory profit percentage again with a different finished goods closing inventory. If the finished goods closing inventory has a different percentage, then we are going to calculate the amount, right? So we are running short of time actually. So this is the end of the question regarding the manufacturing. And inshallah, I'm going to solve the next question soon. But I will take some time. Ratios, it is with me. And profit and loss sharing arrangement for the question also, inshallah. I will upload it on my YouTube channel as soon as possible. Right? Keep seeing my channel. I need your support, especially the overseas students. I really need your support because you are the people who made me realize that, sir, you are special. So inshallah, I will try to help you out all the way through in February, March, in the next May, June also. Inshallah, you will see many new things and many uh, things which really will make you really happy and will make you proud also. So thank you very much. Keep supporting me. Take care. Inshallah, see you in the next class. Allah Hafiz. And feel free to ask me any question on my WhatsApp number or on my YouTube channel. 0333 471 2897 is my WhatsApp number. Thank you.